So tax considerations, it really depends on a few different angles. The two principal angles to consider is your home jurisdiction, so where you pay taxes. There's rules that apply to that. And then of course there's rules that apply to where you have your precious metals stored. Let's start maybe with the rules where you have them stored. In the case of global gold, we've structured everything in a way where there's no taxes as far as the local jurisdiction. The types of taxes that you mostly have to consider there is value-added taxes. So for example, in Switzerland, when you store precious metals in Switzerland, there is no VAT, no value-added taxes on gold. However, there is value-added taxes on silver, platinum, palladium, so on the white metals. However, if you keep those white metals in a bonded warehouse, kind of a tax-free zone, there's no VAT on that. That means that as far as global gold goes, we've organized in a way our procedures, and we're working with security vaults, high security vaults that don't have any VAT to them. So that's kind of the local Swiss area, and the rules are a bit different, but in general with global gold we don't have any VAT. The VAT will only apply once you actually deliver your white metals into the jurisdictions out of, so when you take them out of the vault and you would, for example, deliver it into Switzerland. The other tax angle is the tax angle that you have to consider is what tax rules apply in your tax residence, in your tax domicile. There, pretty much in all tax jurisdictions, there's on the one hand the income tax element, or in the case of gold, generally capital gains tax. So when you sell gold and you make a gain, you generally own capital gains taxes. As far as those jurisdictions that have wealth tax, France, for example, has a wealth tax. There could be a situation where you have to pay wealth tax on your holdings. We get a lot of questions also from American clients, from US taxpayers. Those taxpayers, although there's no wealth tax at this point in the US, and I've already mentioned the capital gains taxes, there's questions with regard to reporting. And the reporting rules, as everything else, when it relates to taxation in the US is complicated. I think there's some 60,000 pages that go with the US tax code. To make it very simple, it depends on how you store. At Global Gold, we have three types of storage. We have something called collective storage, we have something called segregated storage, and we have something called key box storage. And without going into the details of each one of these, in general, when it comes to US tax rules, and I'm not a tax attorney, but we have advised with tax attorneys, it looks like any situation where your custodian, your controller, your program partner can buy and sell on behalf of you without you having to come to the vault or meet with them and take your gold and place it, it's reportable. That's a conservative position. We have some competitors that say otherwise. I will be very careful when doing those things. So specifically with Global Gold, what we advise is that with collective storage and even with segregated storage, that you report the gold on your FBAR and also on the shadow FBAR, the 8938. When it comes to the key box storage, it appears that that is not reportable. So clients that do not want to report but still be compliant, that may be an option to consider. Always, when it comes to those questions, please, we have to tell our clients, advise with your local tax attorney, because rules change, and we do not want to be liable for any bad decisions that our clients make. But those would be the principal guidelines that I would recommend.